Thank you very much, Nick Caronet. Stay with us. We need to talk about all of this in a lot more detail. It'll be interesting to see how governments ultimately end up recapping some of these banks, recapitalising them post these stress tests. Alan Lancz is the president of Alan Lancz Associates. He's with me in the studio in London. Bob Grady from KN Capital joins us. He's out in the US as well. Gentlemen, welcome to the show. Thank you very much indeed. Alan, if I might start with you. Confusion seems to be the watchword of European politicians. Wherever they turn, they seem to sow it, and they seem to cause chaos in the markets. Yet Jean-Claude Trichet last week was saying, don't rule Europe out. We're actually got a lot more momentum on this side of the pond than you think. But the politicians seem to be doing their damnedest to make sure that actually we don't understand what's really happening. What's your take on the story?
Yeah, I think it's difficult. It always is, Guy, and I think it's a situation the key to Europe right now will be the stress test with the banks. And we're hearing the same thing as we heard a year or 16, 17 months ago in the U.S., which was, the stress tests aren't transparent enough. It's not as difficult as the scenario that it could be as far as economically. And when you get a situation like that, everybody was worried that the stress tests in U.S. banks would be useless, and I'm starting to hear that in Europe too. I think it's a good first step. There's a lot more process to go, both politically, economically, and with the financial regulations, but I think it's good that they're addressing the problem. It's not just a Band-Aid, and it's going to take a while to really, as far as correct itself.
Bob, the interesting thing was, though... Sorry. You want to pick that one up?
Well, yeah, I think, just like in the United States, it's going to take a while. We're not altogether completely done with our problems, even with the investment banking side, Goldman Sachs and Morgan Stanley. And I really think in Europe it's just the start. So we're not, they're addressing it. We'll have to see what the stress tests come up with. It's not a cure-all, but it's a good first step. That's what we did in the United States, and I think it's something that needs to be done. I think the problems in Europe, and we've been avoiding that area as well, are going to be something that's going to take a long time. It's a matter of the period of deleveraging. Takes quite a while before you can really, as far as get back to even close to normal, and that's why any kind of recovery would be anemic and not the V-shaped recovery that investors were expecting in April and May.
All right. Stay right there. Alan Lancz, president of Allen B. Lancz & Associate. One of our guest hosts for the hour, Bob Grady, managing director.
Let me jump in on you, Bob, because I think we're having a few mic issues, which I'm certain the audience are hearing as well. Alan, let me pick up with you. We're spending a lot of time over here obsessing about whether Greece is going to go bust. If you look at the states in the States, if you look at the sort of municipal story in the States, it's getting bad. Is this the story for next year, that actually, while this year we spent worrying about Greece, next year we're going to be worrying about some of the peripheral stories in the States and the impact that that's going to have on the core federal story in the States as well, which could really explode?
Yeah, I think it's going to be a multi-year process, Guy. It's not going to be something that, we're over the horizon or whatever. I mean, we're doing the right things, but we have to address the debt. And unfortunately, that's going to mean higher taxes. And, in the face of an economy that's not going to be growing as what most economic recoveries do get to the heights of, it's a difficult situation.
Right, Alan, this municipal story out of the U.S. has somewhat of a semblance with what the Japanese banks and what Japan faced in the 90s. They kept on extending and pretending that those loans were going to be okay, but ultimately it did get into Japan in the situation that it is. Is this what is going to haunt the U.S. back into a double dip?
Well, it could. It's definitely a possibility, and I think the right things have to be done. I think if we continue anti-business rhetoric, with the current administration, and if the election supports that, as far as in November, I think it's a situation where the United States could have some more difficulties. I'm not sure about a double dip, but it's definitely going to be a tepid recovery.
Right. Right, and Alan, I talked to some money managers, and they actually say they don't care about the European bank stress test because all the banks are going to pass anyway, and they're more focused on the municipal story out of the U.S.
I agree. I think the stress test in Europe is just a first step, and the transparency isn't there, and it seems like a very easy hurdle. I think it's a good first step. I mean, we'll have to see what comes out at the end of the month, but there's still a lot to go, and the municipalities just the credit crunch. There's a lot of companies in the United States and all over the world with a lot of cash, but as far as trying to leverage that out, there's too much uncertainties for companies like in the United States to hire right now because they don't know what the tax, implications will be, and they don't know about health care, and there's just a lot of clouds.
And that's the point, absolutely, Alan. And U.S. companies have $2 trillion to spend to create jobs, to buy equipment, but there is that uncertainty, and there is this anti-Obama sentiment, especially in the business community, when they don't know about taxes, they don't know about regulation.
Yeah, it's getting really interesting, and it'll be interesting to know how Alan views this. Alan, we're coming up to the point where potentially BP can have a cap on this thing.
Yeah.
It's not that far away now. Stock looks cheap, selling off assets. You've got potentially Exxon circling. What do I do? If I haven't sold out already, do I sell out? Is this a stock I want to get back into? Because once that cap's on, we can start moving forward. What's the strategy?
Well, I think if you haven't sold, hold on. I think when it went into the 20s, a company like BP or even like Anadarko, which was hit, tremendously, with just a partial ownership and maybe not the liability, would have been a better play, less risk. But I think BP getting closer to the cap. If you look on Exxon Valdez, I mean, the last payment happened 20 years ago. Last payment was last year. So if you time value discount the money,
and cash flow is strong, they can deliver, they can probably pay this off long-term cash. They've already put 20 on escrow.
Exactly. I mean, there was so much talk, especially in the States, about BP going bankrupt and what have you, and I really just don't see it. I think I wouldn't sell it if you own it, and it depends on what type of investor you are, if you're going to buy it at these levels, because there is some speculation. You still don't know, but the cash flow in that company is tremendous. The assets are tremendous. It's a big plus that they don't have to sell stock or equities or bonds right now. As far as that goes, they can just sell the assets and get a good price.
Yeah, it's getting a good price. It's critical. I think the bond market's probably pretty much shut post those ratings downgrades, or certainly it would cost a lot. US Squawk coming up a little bit later for viewers in Asia and also, of course, in the United States. Carl on deck to tell us what's coming up. Busy show?
This growth, and really quickly before we have to run, Alan, you also are looking what specifically out of earnings? Are you going to be focusing in on sales growth being critical?
Sales growth is critical, probably more so even is going to be the guidance as far as for the third quarter. I think, the first half of this year, the comparisons are very easy, but third quarter, particularly fourth quarter and first quarter next year, I think it's going to be much more difficult. We're going to have more headwinds with higher taxes in the States and potentially correcting some of these problems with financial regulations. A big part of the financial earnings are the growth is from the banks, and if they get restricted, it could hurt.
All right, Alan Lancz, president of Allen B. Lancz and Associates, Bob Grady, managing director at Cheyenne Capital. Great to have you with us. That's going to do it for the program. I'm Nicole Lappin in the United States.